things have changed. I mean, this piece, when I first saw it come across the wire, it made a big impact because that's the question that many investors have been asking is where are we in the cycle? We've talked about the clock of the market cycle. What time is it for
Hmm.
multifamily with 12 o'clock noon being the top of the market? So that was second quarter 2021 when prices absolutely peaked. But where are we? Are we at the bottom of the market? We know prices have declined 20 to 30%, but are we absolutely at 6 o'clock? The consensus is we're probably somewhere between 4:30 and 7:30 or
Yeah.
somewhere kind of near the bottom, but not sure have we gone past it or not. This Green Street report, Matt, essentially is saying we've hit that bottom. So we're just past 6 o'clock, which again is incredible news because and again, I don't think we're out of the woods. I don't think we should, start counting all our chickens just yet. It's more of a very positive sign, and it's a data point. So we have to keep looking at the data points because,
Yeah.
again, a lot of folks were concerned. Investors, we've been waiting again for this sign of where we're at. Again, a sense of we're at the bottom. But essentially, again, this Green Street article on their commercial property price index puts us basically that, we have bottomed out and we're starting to see increases with the Green Street Commercial Property Price Index increasing 0.7% in June. Matt, what are some of your takeaways from this report?
Yeah, I think that the big takeaway here is sure, okay, 0.7% increase. That's okay. It's not great, and the index right now, like if you're talking about like absolute value, is quite low. It is at the same time, it's at the same place that it was. So on the way kind of up from the pandemic lockdown. So the last time it was this low was in December of 2020. I'm sorry, November of 2020 in the months over those after the pandemic lockdowns. And then before that, actually, the last time the index was at this point was in October of 2015. My point is that property values as measured by this index have a lot of catching up to do. So it's a little bit natural in terms of like the technicals that it would bounce back from this relative low point. But digging into the reasons, the specific reasons beyond a magic technical line moving is apartments. Apartments are moving all of this. I don't get out of bed for a 0.7% increase, but what about a 4.9% increase? What about 7 times that increase? That's how much apartments have grown in just the past month. Again, we are still making up for a lot of decreases that have happened since like December 2021 or
Yeah,
shortly
still
thereafter.
off 22% from the peak.
Yeah, we're off the peak, but we are going we're getting positive and the amount of gains in the apartment market specifically is lifting the entirety of the other of all other property types. I think that that's incredibly notable and it's worth mentioning that industrial, mall, office, strip retail, data center, healthcare, all of those didn't change at all last month. The only thing that changed was apartments, and they went up 4.9%. So that's very much worth noticing. And I would argue that in terms of maybe apartments specifically, but CRE in general in this index, that 0.7% is the second month of growth in the property price index. So if we are bottoming, or if we have bottomed, maybe we bottomed 2-3 months ago, and we are starting to now tick up. So it increased last month and increased this month. We are 1 month away from a bona fide trend, is what I'm saying. And it's also, okay, we got those 2 months of increases. It could tick down, but those last 2 months are the first time that we've seen actual increases since December of 2021. So that's like, it's also very notable that they're increasing period because it hasn't even budged in a positive direction for like over 2 years.
Yeah.
A lot of things to celebrate,
And
I think.
I think what's notable, Matt, is, and again, I think it's worth reminding everybody because this may seem like, okay, well, yeah, apartments are always good, but we have to go back. One, acknowledge we're not out of the woods. There's still a
Hmm.
lot of loan
Yeah.
maturities that are coming up. There's still a lot of distressed properties. We're still going to see foreclosures, but we have to remind ourselves that multifamily, while the fundamentals have always made a lot of sense, kind of take the capital markets interest rates out of it. We're dealing with a ton of supply right now. We're going to talk about absorption here in a second. But multifamily, what was different from other sectors, hospitality, retail, industrial, office, especially, is that
Hmm.
multifamily increased in value so much. I mean, like office properties didn't really increase in value much in the
Yeah.
pandemic. They were flat and they declined. Hospitality properties, they were volatile. Industrial saw some nice gains for sure.
Oh yeah.
But multifamily saw some of the most gains. And so, the higher you climb, the more room you have to fall. The
Hmm.
thing that we're seeing similar declines or saw similar declines relative to other sectors, kind of low 20% range, but we're bouncing back that much quicker.
Yeah.
I think it really highlights the inertia that's driving the fundamentals for multifamily right now. And this is going to be a key signal. And again, remember, this is on the backs of Blackstone and KKR making huge bets in the multifamily sector. So,
Hmm.
this is on the same data that they're seeing and leading them to make multi-billion-dollar decisions. Now, we still have a lot of more retail and middle market investors out there, still very fearful for understandable reasons, like we mentioned, the loan maturities, all the supply, slow rent growth, interest rates, et cetera, et cetera, et cetera.
Yeah.
The question is, do you buy now for basis while prices are low, while there's some short-term headwinds but to take advantage of the long-term trends, the long-term fundamentals that are highlighted by this record demand that we're going to talk about in the Real Page article.
Yeah.
So again, people have to ask themselves the question, you know, is it worth waiting until we're absolutely in the all clear? As I've heard some investors discuss, I had a conversation with a big family office, Matt, over the holiday weekend.
Hmm.
And, I asked them what their thoughts were on investing in just real estate in general right now. And their thought was, they're like, we want to wait for the all clear. We want to wait. And this is an interesting metric. It's understandable there. They said, we want to wait until we see the 10-year treasury drop below 4%. Once
Hmm.
the 10 years drops below 4%, then we can get some real natural positive leverage without having to buy down rates or
Yeah.
do anything crazy. And there should be a nice cap rate and interest rate spread there. The problem with that, it's sound thinking, it's conservative thinking, is that you're probably going to, chop off some of your potential for highest returns
Yeah.
because again, to get the basis to buy low, by the time that interest rates are low, we're already seeing strong buying activity. We're going to see sellers come to market, finally bring properties out, and the floodgates will be unleashed, Matt, because
Yeah.
every asset manager, um, every apartment investor is going to be piling in. Again, because we're on this macro conversation of apartment and commercial real estate investing and alternative investing through family offices, registered investment advisors, which I think is going to be a massive trend over this next decade. The last
Hmm.
cycle saw these wealth managers, RIAs, starting to dip their toes into kind of private placements, and multifamily is one of those darlings, and a lot of them weren't able to take advantage of the last cycle. Maybe they did a deal, but they were trying to ramp up their platforms, how to get their clients allocated. And we're talking about billions of, I don't know that exact number, Matt. I should, but it's hundreds of billions, if not trillions of dollars of ultra high net worth individuals. Capital is managed by registered investment advisors, these wealth managers. They're all saying, hey, look, I need to have exposure to alternatives. I need access to multifamily. These groups have been just figuring out the right way to get their clients into these deals.
Hmm.
Not to mention every single office investor, they're not gonna invest in office right now. They're going to
Yeah.
be looking at what works, and that's multifamily, that's industrial, and then some of the other niche sectors such as hospitality, retail, and opportunistic office. So I think we're setting ourselves for a really nice cycle. Again, knock on wood, nothing set in stone. We could see a black swan event. We still have loan maturities that
Yeah.
are coming. I mean, we still have folks that people will lose money and have to hand back the keys to lenders.
Yeah.
High profile building in Indianapolis, Matt, that we discussed several weeks ago on the
Hmm.
Gray Report, now is being sued, going into foreclosure. That's not the last time we've seen that. We're going to keep seeing it again. But if you are not bogged down with distress, it's a great time, I think, to get into the market.
Yeah, yeah. That was another article that I didn't have time to include in the Gray Report. Was this is recent Wall Street Journal article about how banks are looking at fraud now that property values have gone so low. It's revealing some mortgage fraud potentially, and it's becoming a problem.
Nice surprise.
Yeah.
Yeah. Just like the last cycle. I mean, we've seen, I mean, no, I mean, there's so much fraud that's going on in every industry, not just real estate. Certainly real estate is fraud is not new to the industry, but yeah, it's unfortunate.
It is, and just in terms of timing, it is so interesting. What we're talking about now, and versus what we were talking about a whole year ago when we were talking about loan maturities and how so much we were focusing last year on the fraught position, and little did we know that the extend and pretend would extend it till now. And those exact feelings that we were mentioning, they're really coming to fruition now. We may have been I don't know, maybe 6 months off or so on the pain that people are felt, but the magnitude of pain is still going to be there, and it is like we did kind of say, it's spread out until now, and there may be no way out for some people.
Yeah, man, I think if you go back to our report, I think we were pretty clear on this whole year was we were going to see high pressure. There's just going to be a generally high pressure environment for many of those borrowers who took out floating rate bridge loans, who had purchased at the top of the market, and their their interest rate essentially went from 4% all the way up to 8 to 9%, and that
Yeah.
loan's coming due, and the lender says, I don't want to realize that loss either. Maybe if interest rates come down, let's just kick this can down the road. But as we talked about, banks are not as patient as they used to be.
And it's interesting, we saw that danger now, and I think that a lot of other investors too see opportunity now when they're writing about the troubles in the Wall Street Journal, but people who are on the ground are like, no, this is a good time to start. Actually, some people that are making headlines may be in distress and stuff, but we're seeing a buying opportunity, and I don't think sure there are people that are going to wait for rates, but I think that a lot of syndicators, buyers, etc. They see an opportunity. They're not fools, and they know what's going to happen to interest rates and to the apartment market largely, and that's what's driving this whole 4.9% increase in a single month on the Green Street Price Index.
Yeah, Matt, I'm trying to locate a chart that I saw that Blackstone had published, or BlackRock had published. Sorry, not Blackstone. Are essentially talking about this idea of timing the market bottom, and they went back to the last cycle, and I'm having a hard time finding it, but it'll be around here. I can describe it. Essentially,
I'll fill it in right here.
They tracked the actual market in price movements with articles that were coming out. And the majority of articles that were talking about, a crash in the real estate is, heading down, and just negative articles about apartments, but really real estate in general, all were written and published after the market had actually bottomed. And there was little information about there was going to be a crash prior to. So if you're reading articles,
very interesting
in that it's percolated up to the Wall Street journals and those folks, and they kind of get word of like there's something going on here.
Yeah,
the bad story has already passed, and we're just reporting on what has already occurred, and often we're actually now on the upswing. So I think we see some of those articles still popping up, being like there's a lot of negativity out there. Again, none of the woods. There's definitely challenges, but when I see Blackstone and KKR, Great Capital, we're also making moves. I see some really smart folks can follow the smart money. Not always the right thing to do, but it's not a bad strategy. I trust their decision-making process, actually putting dollars to work, as opposed to a journalist who is casually interested in real estate and casually follows the multifamily market to make a significant call, which for an article that is more or less written for the layperson that's not in the real estate industry. So I think it's a great time to get in. Let's go over to this Real Page article, Matt.
Totally.
Let's talk about. We're talking about good stuff. If you're a listener or viewer of the Gray Report, which if you're not what you are, you're listening or you're watching, make sure you subscribe, leave a comment. we don't shy away from the negative stories. I mean, like we'll be like raising a lot of money for a real estate deal, and then we'll talk about articles that are like very negative for whatever reason. We're going to be throwing a lot of
Yep.
positivity today, just because that's what is actually what we're seeing. But not every episode is like this. We don't usually pull really any
Yep.
punches when it comes to the good, bad, or the ugly.